Hello, everybody, and welcome to the Plus Three Futures and Commodities show. We are recording a couple hours before the close here on Friday, the 7th of February. And the theme for this week's show is it's Groundhog Day again in the market. When are we going to break out of this pattern? How are we going to break out? What's the likely breakout? We're going to review all those things as well as usual, the important levels. My name's Ben Maldonado. As always, I'm here with my partner, Barrie Hederachi. Barrie, how we doing?
Doing great, doing great.
Looking at the pattern, we could be, it could be a week ago, it could be 2 weeks ago. It does seem as if we've been stuck in this pattern and in this area. What is it going to take to get us out of here?
Yeah, well, this is what uncertainty will get you. And
Hmm.
we talked about that last couple of the January podcast, right? Towards the end, we
Yeah,
talked about
yeah.
the this idea of uncertainty. What do people do? Well, a lot of nothing. We just go in it, we're going in a circle and let's take a look how long we can do this. One nice thing about the market is, whatever it's happening doesn't last for too long, everything ends.
Right,
Everything's on a clock.
right. That's
So
true.
whatever is happening will soon come to an end. All right. With that being said, my goodness, talk about groundhog. I mean, it's really this 60/20 has been, I feel like every Friday I'm talking about 60/20.
And it looks like it's headed there again.
It's right on it again.
Yeah.
Fair enough. 60/20 is still the number for next week, no matter what happens here. Of course, to the upside, we have 61.13, and you guys see, from 3 weeks ago, that was a high. It was the high back in December, and we never really went back to take it out. I mean, that's a whole nother thing. What's the market telling us? We can't take out this high. And the high also, as you guys know, we came in on a few different cycles. We had some monthly things, weekly, and we had some daily things that capped it off. And the result is we didn't really have a big correction. What we're having is a huge sort of fourth wave looking consolidation.
Hmm.
And Ben and I were talking about the other day, like, hey, is that what distribution looks like? Well, yes, it could certainly look like that. If you guys have an argument against it, let us know. I mean, what pattern? Why wouldn't this be some kind of a distribution pattern?
Hmm.
So far, it's hard to tell if it's accumulation. I don't think so, but obviously a lot of sectors are rotating through, and this is not a single stock or single commodity. So we have to kind of probably look at these ideas like distribution accumulation a little bit of a filter, right?
Yeah.
Filter on it. 60/20 is the level we're going to look at. Watch for next week. The idea is still being, are we going to get stuck below that or not? Clearly, this is the great example of being stuck below 61.13. You see the 50% of the square. We ran
Hmm.
up, got stuck, and just bang it up, and really, really can't do it. And we did square out. We have a square that came up in December. Then we have another square that came up in January. So cycles are clicking away, but the market is not getting any traction to the downside, nor is it getting any traction to the upside. So to be fair, bulls and bears are still fighting it out and slugging it out after 2 months,
Hmm.
and that's quite a bit of a fight, right? I mean, for 2 months, come on.
Yeah, it really is.
And we talked about this chart in the last Friday. And the key thing being here, looking at the forward contract, March contract coming off the August lows, we had a 90-day run cycle expire in December. So that was the high that we're working with.
Hmm.
And we never, the idea then was, until that gets taken out, we have to treat this as a high and trade accordingly. Now, last week we talked about, every time it came back, if you look at here, you see the last couple of times we held above the 90, which is a little bit of a sign of strength versus weakness, where we had early weakness here, and you can see how we made lower lows and lower highs and just dropped right into second square. And it was a little bit suspicious to me because we really didn't take out these other lows. We didn't quite get to the 50%. Uh, wasn't exactly the quarter of the square. Um, a lot of little gaps left in there. Me questioning what's happening, just looking at this chart. So
Mhm.
here again, this week, what happened? We went half a square. We went from the 90-degree line, and as of this morning, we ran up to the 50% of the square. And this is why, if you guys are wondering why we're using squares and, what's the deal with the squares, it helps us really see the measured moves within the market. And you can see this was a half a square, a lot of half squares. This was a half square correction, half square.
Mhm.
So again, we didn't quite take out the lows, but we ran up to half. Now we're turning down. I would say it's getting crucial here. Couple of other things. There is a clock running here. There's another timing mechanism here because of all these cycles have already expired. We didn't take out the high. I think pretty soon, I would say next week, either we have to take out these highs or at least get on top of this 50% of the square,
Mhm.
or do it big enough of a correction so we shake out all the weak hands here. We're going to rally. Do one or the other. Either we're going to have to go down and shake everybody out, or we're going to have to go out and shake everybody out, because we've been in this range way too long, and I think everybody's getting a little too comfortable, is my take, because I'm
Mhm.
getting a little too comfortable. You know what I mean? It's
Yeah,
just,
sure.
and not to mention everybody writing options and condors and everything else. All right, so what does all that mean? All that means is watch the 90 level. If we get below that, that's really going to be sort of the signal, right? So 59.40, you really want to watch on the futures contract to the downside if we can get stuck below that. Or are we going to break to the upside about the 50% level, which would be about 61.21, the upside? That's a bracket. In between, as you guys can see, it'd be dumb to like call anything out because you see the mess we've been in. We have to go off the extreme, and we did up here. Last 3 Fridays, it worked out nicely because of the 50% level and market being unable to hold above it. And slipping below has been meaning, at least for the last couple of weeks, we come back to visit the 90. And my take is, we're not going to do either one of these visits continually. I mean, we can do it for a while, and we have. I just, my sort of the gut feel is we've done 135 nowadays. And the reason I say that something has to click is we've been doing this for 45 days, right? You see that?
Hmm.
So,
Square to
uh,
square and
square
top.
to, mm-hmm,
Yeah, square to
yep.
square. Hmm.
And pretty much on the money, right? I mean, here the bar is right on the 50% here. Bar came and touched 50%. And we've
Hmm.
done 45. So coming up into 135, there should be some kind of a shakeout. So I would watch it, see what's happening there. And you guys know the levels to watch. I'm not going to call out anything in the middle because we know the range. So it's either upper boundary or lower boundary. And that's kind of you know, it's on the charts, easy to see. Just a quick reference to the continuation chart and see what's happening here. It's pretty much the same. I mean, it's the same pattern. It's just with a little bit of a tail attached to it.
Hmm.
And we can see here, 6,100 was the 50% of the square, 105, 6,100, 6,105, coming off the September lows. And more importantly, we have this ABCD that sort of finished up, and we tapped it and everything's great. And we also have a ABCD that, you know, finished up on the weekly that we'll look at in a little bit. So a lot of things terminated here. It's nice when the price touches the level in a couple of days and it just takes on the other direction. But here, you know, other than that first drop we had, we've been just sideways. I would say the thing to do is right about now is when everybody's a little bit comfortable. And this is about that 45-day mark that I pointed out earlier. So because of that, I would really watch next week, watch the boundaries, see if we can, basis this chart. Obviously, this 61.03. I know we had 61.13 on the other one. We want to watch these to see if we're going to get above or not. So that's something um, we want to keep an eye on. And coming off the October lows, we squared out here, and we also squared out right there last week. And I
Hmm.
remember talking about that, pointing that out. And
Yeah.
sure enough, we got that drop. Of course, we get everything within 24 hours these days. So You know what I mean? Either you got to have be ready, or there's no way to chase any of this.
No, no, it's difficult.
And if the pattern continues, we're going to be down on Monday. So
Hmm.
it's just sort of the theme we're running these days, Manic Monday. So we have anything else you want to add to this?
Just that we're working on an outside reversal bar today on the daily,
Well,
which
that's a big deal.
it's a big
Exactly.
deal. Yeah. If
That's
we
a big
close,
deal. I
if we
wanted to
close
mention that.
down
Yeah,
here, yeah.
right there.
Hmm.
So we do have an outside reversal. Yeah. So watch it next week. We know what happens in the
Because that that
direction it
basically
gets some
tells us
traction.
that the highs today was a false break.
Yes,
And
that's right.
it was a false move to get people off balance
Hmm.
on the NFP, which makes sense, right? They do that. They use those events to do that sort of stuff.
Absolutely. So we have that. We talked about the 45 days running out from the
Hmm.
high. Here's the Dow, which also happens to be squaring out from the lows back in October, September, October. And so that's another event.
Hmm.
In this case, we ran 36 from this low to high, not quite the low, but nonetheless, we're running out some time. Couldn't quite get above the 50% of the square, but it is holding remarkably above this 44,300. So we really want to see we get into this mishmash here, into the sort of this zone and get below, or what? If we don't,
Hmm.
I'm guessing we're just going to consolidate in this zone. This entire zone might become a consolidation zone. But we did make a lower high here
Hmm.
this week, so let's not forget that. So everything as far as indices go, you guys can see it's just the clock ticking. We have the cycles in place, everything's in place. It's just a matter of what's next. Because we've been consolidating, we can't get too far ahead of ourselves, so we have to kind of take it day by day, or at least week by week. And in this case, we talked about the highs, we talked about resistance, we talked about the cycles that expired, and we know the levels to watch if it's going to break to one side or the other. And we also, we have this triangle happening on the ES. I would like to see a break sooner than later, because after big cycles expire, the longer we screw around, the lesser the chance of a fast break to the downside. And I
Hmm.
speak about fast breaks not because I'm a bear, but just because you make faster money to the downside.
Yeah, it's a
So
lot more fun to trade.
it's way more fun. And if we don't break to the downside, the upside is the other side. I mean, there's only two ways to go. So we want to really watch this closely and make sure it doesn't whip everybody, including the bears. We want to watch this to see. We want to get a break soon, but then again, we know the level, so we'll just deal with it as we go. That makes sense? Is that okay?
Absolutely.
Okay. Let's take a look at the weekly chart. So here's the ES weekly. And there's that big, I hope you can see it. It's a dash line. I can make it thicker, but it should be
The
clear enough,
ABCD,
right?
yeah, yeah, it's
Yeah, there's a big
visible.
ABCD that completed. I think with the square, it just doesn't do it justice. I mean,
Hmm.
that alone is enough to like turn heads. So there it
Yeah,
is. It's a little better.
it's huge.
Yeah. I mean, how often do you see these on a weekly chart and with encompassing about, 4 or 5 years?
Yeah,
Not that often.
no.
And with these kind of giant strides, right? So everything seems to be pointing towards the big old completion here. Again, like I said, tricky thing here is if you just look at this top, what do we have? We have a high, we have a low, we have a lower high and a higher low. So we're kind
Hmm.
of contracting into a move, So the problem with the triangle is, we could just easily break to the upside, or we could false break to the upside and tip over, and then fall, or we can just break to the downside and go. All of those things are possibilities. So this is why we know what's here in terms of squares and resistance. So we just want to get those first clues as to which way we're going to turn. And that's why we're watching the dailies. And if you guys want to follow us on X, we post daily 30 minutes and intraday support resistance fuse lines. And I know you post on most every active chart that we follow. So it's all
Hmm.
there, NASDAQ,
Hmm.
everything else. And if you like our work, this is a good time to remind you. Please feel
Yeah,
free to click the likes and share and subscribe. you're not subscribing. So this chart is the cash square the low chart coming from 2009 low. And what's interesting is we have a quarter square timing line coming in very soon. This one is coming in. Well, this is the weekly chart, right? So end of February, 21st to 28th, and we're already at the 50% of the square. So that is a legitimate, valid square that's
Hmm.
here. Not to mention, we have this ABCD kind of end finishing that up. So this is kind of a beautiful chart in that sense. Obviously, people who admire this probably 5 years from now, see what happened, post
Yeah,
all
yeah,
this stuff. Right now, it just looks like, well, we ran up into it. Now what? Well, what I just wanted to show you something very cool. If you look at the timing lines, this is just the quarters, not even the eighths or, just the quarter lines. Every timing line, we're 1 or 2 bars from starting a bigger move. So here, within 2 bars, we started this, we had a correction, couple of month correction, then 2 bars we had this big run up, and then within 1 bar we started this
another
downturn that
correction.
lasted all the way to February,
Hmm.
from July, basically big, good, decent run, and from here we're basically at 1 bar, which started this entire downfall,
Hmm.
and over here we were 2 bars off from almost the entire freaking year. So,
Right.
so every bar, I mean every timing line, we were 1 to 2 weeks, 1 to 2 bars from a decent correction of some type. And I'm wondering if we're going to be, if that's going to repeat here. And my guess is yes, because just because how are you going to fight 100%? You know,
Yeah, I mean
uh,
it's pretty good stuff.
yeah, it's good. The thing is, this is coming in somewhere in February. Like I said, it could be 1 or 2 bars off, so it could push all the way into March 7th. So we'll watch that. This is not really for the very short term trader, but if you guys are watching the bigger cycles unfolding, you want to watch this. I mean, we'll all review this every week, see what's going on, but this is something I know I'll bring it up. So we watch it for the next few weeks. And it kind of dovetails with the midweek podcast we just did on the tech stocks. We looked at a lot of monthlies and weeklies and not using the same square, not using the same anything. Um, and we saw a lot of the price and time cycles that are attached to each one of those uniquely attached to those stocks were expiring through here. And then to see the S&P is doing the same thing. So there's something cooking, right? Obviously. And a lot of people are kind of getting the scent of it and pointing to all kinds of things. And obviously we have to wait till the market is ready to move. So but now we'll just watch it, track it on the shorter time frame, track it on the even down to the 30-minute level to see how we break.
And if you haven't watched that last weekly video we did, the midweek video, definitely take the time and watch it because it shows big big cycles, longer term, monthly, weekly timing across a spectrum of the heavily weighted stocks in the indices.
Yes.
I mean, it really, if you're not aware of it, it's really an eye opener as to sort of where we are in the cycles.
Yeah. I think it's really good to I mean, it was good for us to do it because it was kind of impromptu. You said, well, let's do the tech stocks. And we said, okay, we just
Yeah,
opened up the charts and ran with it. And we
right.
were even amazed at all the things that we saw.
Yeah, so the surprise and the awe that you heard on the video was real because
Yeah.
it was just a suggestion that Barrie and I were talking, what are we going to talk about on the show? And we said, let's look at these tech stocks. Let's look at these, heavily weighted stocks. They're releasing earnings, they're reacting. Let's just review them, because I think people will be interested in them. And
Hmm.
and these things came out, and I was like, wow, that was really impactful.
Hmm.
That was good information. So check it
And
out if you haven't seen it already.
all right, enough for the stocks and indices. Let's move on to bonds. Bonds daily. Well, we came up to the resistance. We talked about this 45 being really the key level to watch last week, which would be half a square move from the low here that we put in January. And guess who else did an outside reversal?
And
So,
outside reversal there too.
right?
Yep. Big
So
one.
let's watch it. It blew a little bit higher on the weekly charts, but the daily, we obviously we watch the daily to watch these key levels, and this 45 has been really active. So that's what we have. Long as Friday high is intact, I would expect the bonds to be done with the upside.
Hmm.
So we'll leave it at that. Let's take a quick look at the weekly. So weekly, we're running a square of 72, and he's having all kinds of issues here at the 144 line, which, I was waiting to hit this. I remember back in 22, waiting for
Hmm.
it to hit the 144, which we did. Nice bounce off of that, came down, made lower lows. And ever since that low came in, we've been sort of sideways. We made a high, a higher low, and a higher high, and a lower low. So you can see it's kind of a expanding triangle-ish, fourth wave-ish kind of a pattern. So
Hmm.
um, let's see what happens here. You saw the daily, we have resistance at the high. If you look at the weekly, we have structural resistance basis the weekly. And here we really want to look at the 114 level and also around 115. So 115, 114, that's sort of the zone. And if we're above that, it just means we're not quite done with this correction. I'm thinking of it as still as a correction, even though we have a timing line here at the low. We didn't quite have a good price. Um, so we'll wait another week to see if we're going to consolidate above 114 or if we're going to drop below 114. If we do, then you can be sure that the resistance on the daily held, and we're just working with the reversal on the weekly charts. Good enough?
Hmm.
Yeah, not much to add there. Crude was easy. We talked about 73.50 being the level support, and if we get below that, we're probably going to head towards 64.75, 65, and my favorite still is the 61.61 we drew out back, I don't know, last year, right? Probably sometime last year.
Hmm.
To think, I mean, that would really be a proper flush to really take out everything, even from 2023, these lows, and flush everybody out. And it might not happen, but nonetheless, I'll just keep it on the chart just to see what happens here. I think we're going to have, I mean, if you take the 50% level between the two levels, 73.50 and 64.75, just to eyeball it, the 69 and a quarter, this area becomes support. So we're getting very close to it. You can see the lows are starting to come together a little bit. So let's see what that looks like at 69 and a quarter or so, 69, let's say, to round it off. And so as long as we're below 73 and a half, the pressure is to the downside with a little bit of support around 69 we just talked about. And beyond that is another $5 down to 4.75. So that we're back in the range again is what bad news is. We're back in the same range we were.
Hmm.
We weren't able to hold above 73.50. And this is exactly what we were going for. We really want to have a clear indication if it's going to hold above or not. So if it's not, then you can see how we bounced up again to try to get up there a couple of days, couldn't do it. Now let's take a look at the weekly. Pretty cute. Same thing. Was that a false break? Possibly. But if you can also draw a steeper line, looking at just the more recent lows, right? I mean, threes and highs. You see these two highs.
Hmm.
If you do that breakout, and this is a check back. And anyway, we're getting into the mix now. Either we flip around next week or we're back in the mix, and we'll have to just wait and watch till we're done with it. So give Crude a little break, but the downside's okay till 69, and you get below that. Well, like I said, we have a little bit more to go.
Hmm.
Gold, on the other hand, is
Yes, it
moving and moving and
is.
grooving, man. Yeah. So, and we've called this out perfectly. You guys can go back and check the tapes. We had the consolidation. We were looking for a break, got the break. We had a check back here, tapped the 240, check back, and we were looking for strength above 240, and we gapped above, came back. This is the second, third bar. It would be the check back day. And then we ran right up into the 50%. So this is why, again, you see the value of squares. Once it broke out, you can see how it broke out, check back, and then boom, went up and hit the 50%. So I mean, if we're going to consolidate up here, it's so bullish, right? The next stop is basically 300 degrees up, around 30,
Hmm.
34. And obviously getting above 29, 12, 50% of the square will sort of guarantee that more or less. But I would say holding above this 2852 during this consolidation, 2852, and then we have 1/3 of the square, 2872. So depending on, if we can consolidate above one or the other is very bullish. I think 2852, 2850, consolidating above that is very bullish, which say that we're going to probably take out that 50% sooner than later. If we take the quarter square out, then I think we're in for a little bit longer. What does gold like to do? Like a resting period, you know?
Yeah, I agree. And if you look from the November low,
Hmm.
we've done a 90 by 60 from that low,
Right,
November
that's right. Yeah, that's
2024.
right. Yeah, from here.
Yep, from
Yep,
there.
I see that. Also, I was
So
going to say yeah, exactly right. You're right.
so
Yeah, go ahead.
if it goes through it, we should really move.
Absolutely. And the other, I was just going to say, we've done a 90-degree move. This is a 60-degree chart. We've got 60 and 30. It's 90. So the move looks like it's completed. So I would wait. And plus, plus it's time for a correction now after this
Hmm.
breakout. Wait and see what happens. Take a quick look at the weekly. That's the other crude chart. Um,
Hmm.
with the big circle, I don't know, man. It just looks like if I just move the circle a little bit to the outside, the arc is holding.
Right.
But let's see. Maybe it's a big dud. But either way, we still have the 6460 line, and we do have the potentially a false breakout. So we're definitely watching this. Something really big could come out of this,
Hmm.
especially if 69 area holds. So anyway, that's on the crude chart. Getting back to gold. Gold weekly. I mean, when the market's trending, everything's just so easy, right? The
Hmm.
27, 68, 69 level we talked about, if we gold clears that, we're just moving higher. Sure enough, we ran right up into the quarter of a square, 29.14. So quarter square here, this is coming off the 22 low. And you saw that 90 that we did on the daily. So I think it's probably time for a little bit of a rest.
Hmm.
And if you just look at the eyeball this, and with the zones and everything that we had drawn out earlier, obviously 27.97 holding anything above that is super, super healthy and bullish. You know? And being that we've done, 6 weeks up, I wouldn't, I wouldn't be surprised if it corrects a little bit or even an inside bar next week. Anything you want to add to gold,
No,
Ben?
I think that's it.
It's a decent take, take on the
Hmm.
thing. All right, let's take a look at silver. Not much. Silver is I mean, we went off this high and we squared out. We were looking for some kind of a bounce off of that. So we got an ABCD up. No, ABCD up. Actually, there's a Gartley here, right?
Hmm.
XABCD.
Hmm.
And can I say it looks like we're just going to sort of hold the space and consolidate. The 50% is not quite working here. We're kind of crisscrossing. Silver hasn't quite made up its mind either when it comes to that. But if we go off the low, it makes it a little bit easier to do the analysis. So 50% here would be $32. So
Hmm.
watch the 32 level. I think if we're above that, we're in good shape. And if we get below that, I would expect a little bit more of a consolidation. So just we leave it at that. This is also, we have a big old triangle happening in
Yep.
silver, and it looks a little on the bullish side.
Hmm.
We should probably do. You used to do the monthly. What are we going to do now? Quarterly, right? We're going to do the monthly show every quarter.
Yeah, we do it
What you're
once a
thinking?
quarter.
Yeah,
Hmm.
it'd be good to look at the silver metals on a
Hmm.
on a monthly and weekly basis when we do that. We'll do it next month.
Yep.
All right, let's move on to copper. So copper
Copper
last
had a
week,
heck of a week.
copper did well, man. Copper
Hmm.
did well. And, this is where you can go back and just kind of marvel at how price action, takes care of everything. We were
Hmm.
talking about holding about this 60 and how, price being above this square, this 405 level is very positive, and that consolidation is bullish and all this talk. And then we finished up with the ABCD, then we broke the trend line to the upside. And the whole thing after that was, how is this higher low going to formulate? How is it going to show up? And we were just waiting to see, how is it going to hold up? Sure enough, we got a reversal this week, um, right there on the third, and basically pretty much coming off the quarter of the square and ran right through the half. So I think, yes, we have an ABCD, might be a little bit of a correction back to about, 446, 445 for a little bit of a rest, but I think copper's in good shape. I
Hmm.
think this entire thing was a good correction, after the move up,
Yep. Nice and
and
long, wear
nice
everybody
and
out.
long, yeah, where everybody out and held in place, and it wasn't looking weak, ever through any of this. So this is what we can expect. So I think it's definitely bullish. We definitely checked out these, and we talked about these higher lows being formed. So everything's pretty much in place,
Hmm.
and you guys knew the levels. So the 50% level here is 453, just so you know. And the quarter level is 430, 430, 453, and 405 was the square we came off of. That's the copper. Let's take a quick look at the weekly. So weekly, I remember last week talking about it holding this trend line and how the 144 was still being held. And long as we're above that, it's sort of a good check back, like it's still positive. And
Nice
boy,
outside reversal there, huh?
nice outside reversal didn't let us down.
Yep.
So copper's in great shape now that we're, really, people stepped up at the 144 level. So basis the weekly, the next really level is 480. 480, if we get up here, we're probably going to take out this high. So we might just peak above the 50% level, because we already broke the weekly downtrend line. Looks good, and it's in line with. I mean, it looks good, especially when it's in line with what we talked about.
Hmm.
Can't complain. The markets go your way, right?
No.
So copper, very nice. Dollar, pretty much doing the same thing. I mean, we did run 90 days out, 90-day cycle from the low, so we were expecting some kind of a correction, which we got. And what's amazing is we were able to hold about this 107 and a quarter.
Right.
And, are we going to triangulate here too, and then bolt up again? So we'll watch this. I mean, we had our run, which was this 90-day run. Now we have to look to see if we can do what kind of a correction we get. And this week, the correction was this week after the time cycle expired. So I would say watch 107 and a quarter. If we can hold above that, we can grind out a little bit more to the upside. But this is really sort of red flag till we can take out this high that was put in on February 3rd. That's the key, right?
Hmm.
And we have lower lows. So a little bit cautious on the dollar for now. It was a bit of barn burner so far. So a little bit. Let's wait to see how we settle above 107. And as soon as we do that, I think, we can get back in the game.
Hmm.
All right, dollar weekly. We talked about this area 109.80 being resistance last week, and that we want to see how this correction plays out. And basis the weekly, 106.75 was support, which we held last week, and 106.20 or so for the 50% of the square of 90, so 135. And this week we went out and put a lower high. So lower high on a weekly, you want to really watch that. We ran out at 90 on the daily, so
Hmm.
dollar could be correcting here. We want to watch it closely. You heard it here first. All right, let's move on to the euro. And I say we couldn't really get above the 90. from last week, right? We tried and failed, and looks like we're going lower.
Mm-hmm.
Let's see what it looks like. We do have a downtrend within a downtrend, so we have a little bit of a counter trend.
Yeah.
So the 90 comes up at around 39.50. How about that? 39.50 is the 90 degree.
Mm-hmm.
Watch that level, because if we started going much lower, start taking out this 2,500 level, I think we're probably going to go lower. So watch it along with the dollar. So it's possible that we consolidate here too, but above or below this line is really the key, like we always do,
Mm-hmm.
like we always watch. All right, take a look at the weekly. Weekly, pretty much the same story from last week. We couldn't quite get above the 50%, which is the level we've been talking about last few weeks. And you can see we tried, we failed. 42.18 is the 50% level. And I mean, this entire week was mostly below that, right? We really couldn't get on top of that, which means weakness. We'll see if we're going to consolidate below that, or if we're going to start moving aggressively, in that direction. So anything you want to add to this, Ben?
No, that half square is the key, man. You can't if
Yeah,
you can't get
for now.
above that, it's going to be
And
weak.
you can see for now the pattern's really getting pushed under it, right?
Mm-hmm.
It's getting below.
Mm-hmm. Mm-hmm.
And the beautiful thing is, we were watching this 108 level back in the day and waiting for all this to unfold. And if you guys have been following us for a while, kind of cool to watch how all these things unfold over time,
It is.
right?
It's very cool.
Right. Let's see what else we have here. Let's take a look at natural gas. Not much. You covered it last week.
Yeah, it's just correcting.
Just correcting. We're holding
Let it,
above the quarter. Yep.
yeah, let it finish up.
hmm But it's doing okay.
Mm-hmm.
It did the half square move back from February all the way up here.
Yeah, we called that square out and said, hey,
Yeah.
we've gone up. I forget what the number was. I'd have to look at my notes, but we did. Let me see. We did
hmm
like a 90 up. Yeah, 90
Yeah.
up from the
Yep.
February low.
And we did a 50% correction.
Mm-hmm.
So far everything looks healthy. All right.
Yep.
What else I got? Well, here's the Hang Seng. We talked
Look
about
at
this.
that.
Well, we talk about it every week. Last week we
Mm-hmm.
talked about the key, this 203.80, 223.80 level being important. If we can get above it, we're probably going to move higher towards the 50% of the square. Looks like we're well on the way doing that. See what happens Sunday night. But as long as we're above this 380 level, market's in a strong position. Called out the lows, called out the flush, the false break. So everything is moving accordingly.
Mm-hmm.
Hey, one other thing I wanted to look at, we didn't get a chance, and I forgot to get into this chart. This is basically the weekly cash chart. I
Mm-hmm.
know we looked at a weekly futures chart, but I wanted to sort of bring everybody back to sort of reality, the alternate reality of where
Mm-hmm.
things happen. And I should probably make these a little bit darker, but you can see how, we have 156 bars from the high in 21. You see the 156 here coming into the high here. All right. And from the low in 22, we're 120 weeks up into the high. From the 23 low, the pullback, the C in the ABCD, this other ABCD, we're 66 weeks, 66, 67 weeks, 2/3 of a 90. And get this, from the low in 2020, we're coming up on 252 weeks right now. We're there,
Wow.
right?
Mm-hmm.
So it's all in there. It's just all in the mix. And the reason this is important is it's the square of 72, and 252 is, well, it's 216. Where's 216 right here? 216 plus a 36, right? So we're there. So the really important thing now is to see how we unfold from here, because God knows we have the cycles and numbers lining up
Big time.
big time. So I think, we're doing okay. We're hitting every time it bumps up, and luckily it's every Friday. So let's see how it works out. And there is a flip side to this, which is, for some reason we get on top of this level, then we're going to be bullish from there on. So it's just how we play out. But we always have to consider the binary, right? I mean, market is a binary really at the end of the day. It's either up or down. So we have to consider both. But for now, we're considering the downside because that's where everything's stacked,
Mhm.
right? No other way to roll that one. Pretty much a story. That's all I got. I think
Okay,
I'm all caught up.
excellent.
Yeah. So we put it back to you and we'll take a look at the NASDAQ, Bitcoin,
And the
and the
grains.
grains you're going to call. Yeah. I think it's time
Yeah.
to look at the grains.
Yep.
Um, Good call on cocoa last week or a couple of weeks ago when you looked at it,
Yeah.
you know. All right.
It's
Let me put it back to you.
it's
Take it from
funny,
there.
first the
Huh?
pattern, then the news for cocoa. It was I think the CEO of Hershey said he's seeing demand destruction now because the price is so high.
Mm-hmm.
And
Oh,
that sort of caused a little shudders in the market.
right, right. So I hear it's great how the news comes follows the cycles, eh?
Yeah, yeah.
It's unbelievable. Never gets old. I don't care how long
No,
you've been trading.
no.
All right, let me put it back to you.
Okay, thanks.
How many reversal days are you going to take, Ben? Every
I mean,
Friday.
there's and this one's an outside reversal.
Yeah, yeah, yeah.
Yep. Just like, just
So
like the S&P, just like bonds, the
we should call it reversal, spicy reversal.
yeah, the spicy reversal. I mean, it's just something that you have to pay attention to because as we discussed, the NFP and the CPI and these big sort of announcements, they
Hmm.
kind of use those to end one move and start another. Is
Hmm.
it possible that that happened again today? Yes, you
Hmm.
know, and the evidence so far is supporting that.
Right.
So a lot like the S&P, we basically been stuck sideways and in this, we spent a little time in this half square, but basically in this half square between 21,366 and 22,000, for the last 2 months. Now, unlike the S&P, this hasn't made a new high or even a double top. It's just been lower highs.
Hmm.
And if today is a reverse, it is a reversal, that's another lower high. Now we just got to see, are we going to get a lower low? The big thing, the first level, really important level, to watch is this 21,366. If we get below that, then that's supportive of, basically taking out these lows. And that could start the freight train going down. We've also been dancing with this one by one from the low in August.
Right.
And you can
Notice.
see,
Yeah. Hmm.
again, we tried to push above it and then boom, right back down.
Right.
So uh I think it's leaning bearish and everything, just basic lower highs and lower lows are saying, we should go lower, odds
Hmm.
favor lower. We want to see 21,366 get stuck below that because you can see here every time it gets down, they've done a stick save and, sort of
Hmm.
rescued it. If we actually get stuck below it, then I think the downside, starts to become a lot faster. So we'll watch and we'll see. We'll see where that goes. Weekly, 21,082 key number. You can see we've been dancing here for 6, 7 weeks
Gosh. Yeah.
for a long time. Daily, it's 21.3. Weekly, it's 21 roughly. So in that area, from 21,400 to 21,000, this has to hold. Because if you lose the weekly here, then you're opening up 18,000.
Mhm.
Right? If we get stuck below 21, 18 would be next. And you can see what happened after, you talk about the circles. I love when you see this, right? The circle ends and boom, you get the instant move down
Yeah. Yeah.
and it rotates right around it.
Hmm.
So that's what we look for in those circles. And you can anticipate them when you have a good circle, like when you get the breakout, you can look for that. Here's your monthly.
Hmm.
21,000 is pretty important across the board. We got one at 21, the weekly's at 21,000. The daily's around 21,350, and this one's 21,1. You can see this is kind of triangulating. This is a good
Sure.
visual of what we've been doing for the last few months. Basically, inside here. So NQ's 21,000 to 21,350 is really, really key. Watch those levels, and if we breach them and can get below them, that should kick in aggressive selling. Let's look at the calendar day one, because this one's been a really good chart, right?
Hmm.
22,000 has really capped this thing,
Yeah.
and now we have this sort of three soldiers thing that we've seen in the S&P,
Hmm.
and now we're getting an outside reversal. So the question is, do we come down and test this half square, which is around 20,600? That would be the next stop, having been stuck under here. So anything, I mean, again, it leans. The evidence is saying be careful. We had cycles come in. The technicals are starting to roll over, and the market's feeling a little heavy. Anything else you want to add here? Any insight on NQs?
Well, I think this ties in with our midweek podcast, looking at all the tech stocks and
Sure.
everything wrapped into one between this and the other indices, all kind of pointing the same way. But we just have to be very careful in how we handle this. Like I said, by next week, we really need to start breaking this pattern, because how much longer are we going to go sideways, especially
Mm-hmm.
after that 45 count? That's what I'm thinking of. It usually triggers some kind of a break in the pattern. So I think we're getting close. So watch that 21,000. What is it? 366.
Yeah.
It's maybe key level
Mm-hmm.
balance point. Yeah.
And to your point, this is roughly 45 here.
Yeah, that's right. Hmm.
So
Yep.
the timing's there. All right, let's
Hmm.
jump over to Bitcoin. Hey, Bitcoin is, we keep saying that, it's chopping, but it's bullish. But when you just visually look at the pattern, this looks like a rollover, doesn't it?
Sure
I mean,
does.
again, not that it's going to crash, but it could come all the way down to here and still be bullish.
Yeah, but that's kind of a crash for Bitcoin
That's
traders,
a that's a big move. And
Yeah,
if
yeah,
we get stuck under, 96.6, then it's 91 and then 85. So this
yeah.
thing could start stair stepping down.
Look, the big clue here is that false break at the high. So
False break, and
anytime
then
you get a little weak in the knees after a false break, you got to be careful.
you got to be careful.
Yeah.
Yep. And this is kind of like the beginning of, I'm not saying this is going to be it for Bitcoin, but this looks like the beginning of like a waterfall pattern. You know how it just kind of drips, 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 and then boom.
Whoosh. Yeah.
Yeah. So we got to watch Bitcoin. This was a cycle, right? a
Hmm.
very a very nice cycle that we had, and we called it out, and then we
Yep.
get the false break of the cycle, and now we've been chopping around in this half square. So weekly basis, if we lose 89.5, then we're going to test the major support right here.
Mm.
I mean, as long as we're on 80 above 89.5, though, you could say maybe we're just going to burn time and chop around in here, which is completely possible. But that's the thing we have to watch. Take a quick look at the monthly. Now here we broke out of the circle, but look, notice how these bars keep coming back to the circle to give it a little test, right?
Hmm.
This one, are we going to get it this month? If we get it this month, it's going to be like in this area here, which is around 86, 87,000.
Yeah.
It's possible. Got to watch it. Got to watch it and see. Anything to add here on Bitcoin?
No, I think you called out everything, and including the patterns. We're good.
Okay, let's
Mhm.
let's go to the grains. Before we go to the grains, let's talk about the others. Coffee's gone parabolic. The thing you got to watch from the January low, we have a weekly 200 January of 2023 low. Let me be correct. We have a 270 by 108 square. That's 108 weeks. So we got to watch that. And monthly from the 2002 low, we've got a 90 by 270.
Mm.
So some cycles are hitting on coffee, some bigger, monthly, weekly type cycles. So this may be the blow off. So we're going to be watching that. You mentioned cocoa. Cocoa's gotten a little weak. It hasn't quite pushed out of this whole consolidation it's having yet. It made a low and then bounced back up, but we want to watch that because that may look a little vulnerable. Sugar, we want to watch and see. We had a push up off the low. Now it's starting to pull back. Let's watch this pullback. If we get a higher low and reversal, I'll highlight that one for you all to look at. But the key action in the commodities this week has my eyes on the grains. Let's start with wheat. Last week we talked about wheat and we were under this wheat and we were under this 578. I said
Right.
we want to get up and sit on top of it. And look what we're doing.
Well, we
First
got up.
we got above it, and now today we had a bar where we were entirely above it. So next week, if we can build and stay on top of that, we can get the push up towards this 653 at the half square. So wheat is, grinding, but doing what it needs to do, right?
Hmm.
Capturing a level, and then you say, okay, let's stay on top of this, and then we begin attacking this. Get on top of that, and then you're going to attack the top of the square. So it's doing what we need to see it do.
Hmm.
Let's look at the weekly. So the weekly shows we had a really nice week, pushed up again after the sort of outside bar and up being up last week. Now we just had a nice strong push up this week, holding the half square, which is good. And now we'll push. So we want to pay attention to the weeklies to see if the momentum's going. If we make a higher high next week, that'll give us another up bar in the week. Just slowly building the case, right? You piece by piece, you build the wall. Here's your monthly. Now, monthly's at a key level, right? We
Hmm.
talked about this last week. We said the daily needed to get above the 578. 595 is the monthly level. And you can see where the high was this week. What was the high? The high was 592.50. So right in that area. If we can push above that monthly basis and sit on it, fantastic. Really, really positive. Right? Hasn't been able to do that since what? April of 24.
Yep.
Almost a year. So that's a big level monthly basis. Overall, when
Hmm.
you're looking at the daily, wheat did what it needed to do this week was capture a level. We captured 578.
Hmm.
So slowly building, but building in a positive, bullish manner. Anything for you to add on wheat? Anything stand out to you?
No, we're good. And we've been talking about wheat every few weeks and how the lows came in, how it's starting to move higher, how it's making higher lows. So the trend is intact so far, coming off the lows. And yeah, good follow through.
Okay. Let's go to the
Hmm.
next one, which is corn. Here's your daily. Last week we talked about this little square here and how 499.25 was the top of the square that we needed to get
Hmm.
above. We got
Yep.
a little reaction off that, but look, mind you of anything that shines, the shiny metal that did
Yep.
this sort of thing.
Hmm.
Right, you square out, you have a little pullback, and then you just start consolidating near the high, and that seems like what we're doing here on a corn daily.
Hmm.
So if we can just keep bouncing around up here under it and then get the push up and stay on top of it, that would be really bullish for corn. Remember, we talked it could even pull all the way back, to here,
Hmm.
like give a 3/8 pullback and it will be fine, like around 460. But if we can stay up in this area and just consolidate and sort of build up momentum to push through, that would be really, really positive for corn.
Hmm.
All right, let's jump over to the weekly. Outside bar, but we made a higher high, so it's not a like sort of an outside reversal or anything scary. But you can see they tried to push it down, and we still made it a higher bar in the week. Closed
Hmm.
over half above half the range. Weekly basis 517 is next. That's what we want to attack. That's what we want to see getting above. We get above that, then it opens up, 620. But you can see this has been a really nice uptrend, right? Push, 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 very methodical. No huge bars like this or anything like this up into the high. It's just, it's kind of grinding like this,
Right, right.
like we did back in early 2020. And then as the move gets going, the bars get bigger, it gets more aggressive. So we're still in the sort of grinding stage. But I suspect once we get above this 517, that's when we see this sort of action. You know, bigger pushes, momentum comes in. And here's your monthly. Monthly's in
Oh
good
man.
shape.
Yeah.
We're above 462.75 full square. So we're above all of this price action. And pushing up towards the half square here, which is around 608. So you can see how on the multiple time frames and different levels, corn is doing what it needs to do. Daily basis, we want to get above 499. Once we do, that could be the real kickoff in terms of momentum.
Right.
Anything to add on corn?
We're good. Other than add more positions.
There you
Right.
go.
Hmm.
All right, and then lastly, let's go to soybeans. Same thing as corn. It's kind of made its high and now it's corrected, held 1035, which is key. That's the full square here. And now we've basically been going sideways.
Yeah.
It's okay when you capture a square to go sideways, as long as you
Yeah.
stay on top, right? It gives you, you basically are burning the time, building up some momentum, and then you can push to the next highest level, which in this case is 1125.
I see a little bit more to go for the 90-day move up. Looks like we
Yeah,
might correct and go a little higher, right?
exactly.
Hmm.
Yep. So this looks good. Just sideways, a lot like corn. It's doing a high level, it's
Hmm.
consolidating near the high. And then we want to see, momentum kick in and get the next push higher.
Right.
But you got to stay above that full square. Here we're still battling, right? This is an important battle on a weekly basis, this 1060. So this week we pushed up above it, we closed below it, crisscrossing it. Last 3 weeks we've sort of seen that. Touched it 4 weeks ago, crisscrossed it, touched it last week, this time crisscrossed it. So it's working, doing what it has to do to chew through this resistance, but sitting on top of that 1060, then that opens up to 1283. But I like
Hmm.
what it's doing here. It's not backing off. It's not getting through, but it's not backing off. Let's look at the monthly. Monthly basis, we already have an up bar, made a higher high. If we can get that push on a weekly basis, maybe we can break through this downtrend line on the monthly with that kind of push.
Hmm.
You can see here how when we captured the square, and now we're trying to build off that capture of 983 and push higher. And that's kind of how it flows, right? Like the daily flows into the weekly, that flows into the monthly, and then when you get all three lined up, that's when you get these huge pushes, especially on these commodities. Anything to add here on beans?
No, well, just to watch out for that 90 that's coming up. That might be the actual resting point for this leg. So
Hmm.
so far, everything's good. We cleared all the levels and looks healthy to me at this stage of the game.
It does. There's one more thing I
Hmm.
want to show you because I remember I was just looking at my notes. Um, I wanted to show you this circle on crude oil because we haven't looked at this for a little while,
Hmm.
and we're at a critical spot.
Hmm.
You can see how the edge of this circle has been capturing price. Last month we tried to push out of it and it got rejected. This month we're inside the circle, but more importantly, we're right battling at that full square. If we get stuck below, get a monthly bar that's stuck fully below this square at the edge of the circle, we could see a fast move down.
Mm.
I mean, these fast moves, you see how when it catches the edge, it gets going. Here it caught it coming down. So we got to watch that. I think this is a really, really important spot. And maybe that's your flush, Barry, right? We get, a
Hmm.
couple bars of flush here that take out these lows,
Hmm.
in the low 60s, and then we get the reversal.
Then yeah, flip around.
But I could see the edge of the circle, causing that sort of speed move down and taking out those lows and giving you your false break and then breaking out of the circle and going up. Because that's the other thing, right? When you break out of the circle, you have, energy going in the opposite direction. Anyway, I wanted to share that one because
No, it's good. Good chart.
I think it's an interesting chart, and it's interesting to watch how it develops over time.
It's good. It's gonna look better if we start slipping here. Don't need to.
It's very true.
Yeah.
Very true. So that's it for me. I think the sort of summation of the week is, evidence is mounting. So what do, Barrie? When you have evidence, at the turn, we never know if it's the turn, right? We just have a piece of evidence or some evidence. And then as the turn begins to happen, the evidence begins to mount up. So
Mhm.
what do you do trading wise? Again, not telling people how to trade, but
Mhm.
how does that evidence as it mounts affect your trading decisions? Like what changes for you?
For one thing, I start watching it closer,
Mhm.
meaning I'm really watching the details. I think, ongoing S&P is a good example. I mean, there are lots of other markets, but S&P is a good one. And, every piece kind of fits. They're coming through different lenses. And we've been talking about these ideas, of, information from the outside, be it news, be it fundamental stuff, be it technical stuff. How do you handle all of it? I think it all has to get funneled into your ultimate way that you get triggered into a trade. I mean, that's the bottom line. And I think a lot of this, the more detached we are, the easier it is. So I think detachment is the key. And information, I think technical information is okay. When I say technical, I'm talking about looking at charts, looking at your trusted tools, looking at your methods, and waiting till, like they say, wait till you really see the whites in the eyes, before you pull the trigger, because
Right?
you want to keep your powder dry and take the shots when he's really clear. Because the thing is, it's not, when the markets are quick to turn, it's easier. It'll hit a certain level and reverse, boom, you're in, everything's okay. The train starts moving, rolling out. Here, what's happened is we're, two steps forward, one step back, and two steps back, one step forward, just back and forth. And I think if you guys are using indicators, it's throwing everything off at this point because of momentum, right? Most of these are momentum driven. So that's going to be a concern for people that are building systems around indicators, that they're all going to be skewed at this point just because of the kind of funky movement that we've been having. And if you're using level squares, obviously those are templates, so it wouldn't be affected. So I would say that's kind of something you want to watch. Make sure you don't get sucked into a bit of a distorted technical signal. Does that make sense? You know what I mean by
Mhm.
that?
Yep. Yep.
So that's one. But other than handling it, I always lean on the technical side. I mean, that's all we have, no matter what the information is, because like we always talk about, by the time the information reaches us, and we all, if you take the pool of traders, information always reaches at different times. So some people will get it, let's say the first tier, and then most people down second, third, fourth, fifth tier, right? By the time they get it after work or however, when they happen to hit the news feed, however they do it. But I think this year, or at least last couple of months, have been really good example of why we need to stick to the technicals and really treat the news and whatnot with sort of a 10-foot pole. Keep it further away so you can see a better picture, not get too close to it.
Right.
And so I think it's a detachment is one part. That's how I handle it, just to detach and not let the news be the driver. And I think we should probably do a series on this because we talked about last time and we talk about entries, but I think news and things can be considered a little bit more once you're in the trade. Like let's say you're into something and now you're in the money, your stops are in place, you got a free trade going, you know, do fundamentals matter? And I think yes, they do. But as you have seen, technicals always kind of lead before the fun news comes out. So you want to keep an eye on the news. You don't want to ignore them. For example, you don't want to ignore FOMC days because obviously if your stops are too tight, you're probably going to get killed. So
Hmm.
you want to keep an eye on it, but not that be the, lead into your trades. That's kind of how I do it. I don't know. I know some people trade the news, so hey, I don't know. What
Right.
can
That's difficult.
well, there's something for everybody, and I think it'd be good to hear what you guys comment, how you guys do it. How do you deal with the technical versus the the informational field? With all the news and everything else that comes at you all day, every day,
Mhm.
and see how everybody else is doing it because everybody has a different take on it. Mine is really over the years is lean more and more on the technical side because in another way, at the end of the day, that's where the net result of all the news goes up is on the chart, because
Mhm.
let everybody else read the news and decide. And if you just watch the chart, that's the net result of all of that is the price right now, right? So
Mhm.
so Friday's close is everything that happened this week. Once everybody digested it, okay, that's the close today.
Yeah.
And so moment by moment, we have that option, to either be part of the pool trying to figure out the price or just watch the price, let them figure it out and we watch it. And I think conceptually, if you can be in the other side where you're watching where everybody else's sentiment goes up on the chart, I think it's a lot easier to deal with the news. Then the news becomes more like entertainment, right? But the problem is to really keep that separation, man. That's because your mind is continually getting pulled into, what if that happens? What if it means this? What if it means the other thing? So I hope that helps. It's a big topic,
It
obviously.
is a big topic. No, and it's always helpful to discuss it because everybody has a different perspective on it, and it may be a way that you or I or someone else hasn't thought about. So it sort of triggers the mind to start, okay, maybe I need to think about that differently. And in trading, that's good because learning and sort of expanding the field you perceive is really important.
Right,
So,
right. And one other thing, just to close it off. I mean, I've known a lot of traders, and I don't know of any trader that benefited from just following the news. You know,
right,
so it's the long-term traders that I know that have made it through the highs and lows are the ones that really lean on the technical side. So that's just evidence, right? Okay, so if you're gonna hold a position view, you have to back it up with something. So if you look back and look at all your friends and neighbors and whoever that have traded forever or the longest, you'll see they probably don't trade the news. Yeah, I'm not
right,
talking about people that bought Bitcoin, 20 years ago or whatever, but I'm talking about people that actually, just trade on a daily basis or trade for a living. You
sure,
really need a technical basis to ground you. Otherwise, there are too many variables, right? So,
exactly.
mm,
Well, listen, it was a great show. Good job, good review. We're at a very interesting, I'll say, spot because um, we were talking beforehand, the sort of the image of fingernails hanging on the edge by your fingernails feels like that's what the market's doing now. But we'll see. It can do it longer than we believe possible. Anyway,
mhm.
rest up, everybody. Have a great weekend, and we'll talk to you next week.
All right. Good job, Ben. We'll talk to you next Friday, or no, let's talk midweek. I'm
Yeah.
traveling again next week, so we might be a little bit off here and there timing wise, and I might not be posting my 30 minutes on the regular just because it's a little bit busy.
Yep.
Anyway, we'll catch you next Friday. Rest up, like Ben said, because it's going to be a busy week. It's really going
It's
to be a busy week. So
really
for
busy.
everybody. All right. Take
Yep.
care.
See you
Thanks.
later. Bye.
Bye.